Hey, good morning, everybody. It's Hammer. Today is Wednesday, January 29th, 2025. I, of course, am here with your daily mortgage rate update, the only place on the web where you get to join me live 9:30 a.m. Eastern Time, broadcasting to you on Facebook and on YouTube. If you're here live, say good morning. If you're watching on the replay, go ahead and give me a hashtag replay in the comments. Let me know that you were here. Whether you're here live or on the replay, don't forget to smash that like button, tag an LO friend, share this post in a group. Always appreciate you doing that. If you're on YouTube, don't forget, click that thumbs up under the video and go ahead and leave a comment as well. Let's say hi to the live folks. Who do we got here this morning? Mike Tebow, good morning, sir. Monica Dinkins, Mallory Fotiadas, great to have you here. Randy Tinkle, giddy up, sir. James Mahan, happy hump day and happy Fed day. Dan Crowley, good morning. Megan Lindbergh, great to see you. Amy Blauser, good morning. Brandy Brickler, good morning. Hope all is well in all of your worlds. Today, I hope you're ready. It is the happy Fed day. What's going to happen today? We're going to talk about it. We're going to talk about what could happen with mortgage rates depending on what is said during the meeting, which way the Fed is leaning as we go into the meeting, which way markets are leaning as we go into the meeting. All this going to have a big effect on which way things go. So we'll be talking about that today. Good morning, Luke Harding, Kenny Rivard. Great to see you. Rob Stewart, thank you for joining this morning. Hope you all are doing well. Mark Clark, good to see you, sir. All right, so I'm going to go ahead and get the charts ready, and we'll flip on to that and jump right in this morning. Remember, if you would like a reminder that I am going live, you can go ahead and sign up hmmr.io/reminder, hmmr.io/reminder. Or you can use this cool QR code over here, and I will go ahead and throw that in the chat real quick. Good morning, Bobby Searson, Harry Dennis, Ron Siegel. I am live today. I don't know why I'd be a zombie. And Ron says that today is National Corn Chips Day. Corn chips are gross. Fritos. Now, Fritos are awesome. Oh, yeah. Happy Chinese New Year, the year of the snake. Slytherin, right? For all of you Harry Potter fans, some of y'all millennials. I actually have read the Harry Potter books, listened to them on tape as well. There we go. That white spots bother me. And seen the movies. So I like Harry Potter. Good morning, Colin Jordan. Monica Dinkins, how am I feeling? I am stuffed up and a little spacey. Thank you for asking. I'm fighting it off. I'm putting up the good fight. I'm here for you, though. For shizzle. So anyway, one more time, remember, if you want a reminder that I'm going live, hmmr.io/reminder, or use this cool QR code. There you go, right there. And we can get that for you. So, all right, let's show you what's going on with the markets this morning. Mortgage-backed securities are up about 3 basis points to start the day. But if we take a look down here at the at the wider chart, you can see we've really kind of grown. And as this goes up, that's better for your pricing. So January 23rd was last Thursday. Then we had last Friday. Then we had Monday, Tuesday, and today. So on Monday, things were up. They kind of dipped on Tuesday. Now, remember, we were up on Monday. What caused this big jump, this big overnight jump, and this improvement was the talk of AI, the DeepSeek, stuff from China. And then yesterday, we lost a little bit of ground in the morning, but then recovered and improved through the afternoon to end the day doing well. This morning, building up on that, only up 2 basis points on the day. However, that's actually a lot better than where we were at this time yesterday. So when pricing came out yesterday, we were around 100.64, 65. So we're about 10 basis points higher this morning because we did see bonds slowly improve through the day yesterday. You see that here on the 48-hour chart, just a slow, steady hike through the day. This morning, that means rate sheets are going to be similar to yesterday, maybe a little bit better. If we take a look, using, say, Mortgage News Daily as a reference point, we've been sitting at the 7.07 area. Use Optimal Blue. Let's turn off the anything but conforming here. And same thing, we're a little bit better here. So we were at 6.94 on Friday, 6.88 on Monday, 6.86 on Tuesday, and you'd be a little bit better today. By the way, I'm curious, which one of these do you think is more, I don't want to say accurate, but yeah, like more accurate for base rates? Mortgage News Daily, Matt Graham, he uses his own algorithm and his own formula to come up with, rates at 7.07. Optimal Blue, that's a significant bump better, 6.86. This is before loan level price adjustments. Where do you think? Let me know in the comments. Optimal Blue, which one is more accurate in your mind? Optimal Blue or Mortgage News Daily? I'm going to kind of reference them both for a little while, but Optimal Blue is pulling it from Lock Deals. And that's what, so they say, right? That's what they say right here. They're pulling from actual locked rates across 35%, blah, 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 blah. And here, Nate Joma, MSNBC is the most accurate. Definitely trying to sabotage me. I got you. Good to see you, Nate. Hope all is well in your world, my friend. So anyway, rate sheets today are similar to yesterday. Lenders are basically holding their breath ahead of the Fed meeting today, this afternoon. It's going to be the big stuff. Of course, reprice risk on the day is high. So the Fed meeting is going to come out this afternoon. You're going to see that at 2 p.m. Eastern time, the Fed will come out with its policy statement. There is zero expectation that we see a Fed rate cut at this meeting. 99.5% expecting things will hold the same. The question is, what will the expectation be for future cuts? Right now, there's about a 30% expectation we could see a cut in March. If that goes up, then mortgage rates will improve a little bit. Mortgage pricing will improve. If that goes down, it's going to hurt us. Same thing as we progress, they'll all move in kind of in lockstep further through the year. The idea of May, it's coin flip that we're going to see a rate cut in May, but markets are definitely pricing one in June. Basically, 3/4 think we'll see at least a single cut, maybe even a double cut by June, and a quarter think we'll still be there. So Ron said it's fun telling clients, all of them, to demonstrate how misleading headlines can be. Don't believe any generic rate because they do not tell the real story. Nah, I get you. I just figured which one was closer to where you're at. So anyway, taking a peek here, reprice risk on the day is high. So you want to be ready. 2 p.m. Eastern time, the Fed's going to come out with their policy statement. They're going to leave rates unchanged. Now, the last few policy statements, they've had very, very little changing from meeting to meeting. They just changed a little, just a few lines, a few words, and that's likely to continue. You're not going to see them really show their hand. So you'll see some knee-jerk reaction at 2 p.m. You'll be ready to lock some loans. But really, the big action is going to happen with Fed Chair Jerome Powell's press conference. And that's going to happen at 3 to 3:15 is generally when you see rates kind of settle in at where they're going to be. So you're going to see a reaction. He's going to come out with his prepared statements at 2:30. He'll read those off, takes about 10, 12 minutes. Then he's going to start taking questions from the press. You're going to see a lot of questions around tariffs. It'll be the tease today. The tariffs, the Trump taxes even, and when we're going to see cuts, where things are going from here. Inflation, where they think inflation is going. Now, that last CPI print that we got last week was very, very favorable in the fact that it came in, basically headline numbers came in as expected. The core numbers came in slightly better than expected. You're going to hear some comments about that in the Fed press conference, talking about inflation and inflation coming better than expected. And they're going to be referencing that in particular. There you go. Thanks, Ron. I see your comment about the OB and lock rates. So, I mean, it's all going to be the reaction. If we see a reaction that markets believe that Powell is signaling the Fed is going to cut more or cut maybe, I mean, I can't believe they're even talking about March, right? This is the next meeting after January, this meeting today. I can't believe they're even talking about cuts at the next meeting. But there's a lot of speculation that tariffs are not going to have the effect. Remember, we saw the Trump trade at the end of last year. Rates moved higher because expectations were that tariffs are going to drive inflation, that taxes and tax cuts are going to allow more money into the economy. That's going to drive inflation. It's going to heat up the economy. All of this was kind of the expectation, and has pushed mortgage rates up a little bit higher, pushed from we were in the low sixes all the way up to the low sevens. So now we're starting to see a little bit of pullback. It's not likely we see a huge trend improvement better, but we could see rates improve a little bit. So for today, we want to be cautiously floating. And there's really no reason not to float into why would you lock this morning ahead of the meeting? You want to be ready to lock, but you got to have a plan. What happens if the initial reaction at 2 p.m. is negative for bonds and it signals that maybe things are going to get worse. We might see a reprice. You got to decide if you're going to float into that press conference and double down on it. The press conference is where you're going to see all the big moves. And we have seen sometimes where the initial reaction will be negative and the press conference will actually turn it positive, or where it'll stack. So got to be ready for those. Mike said, I'm not sure how you configure a rate. Broker comp varies from 1 to 2.75. Also, Mike, just averages, Mike, just averages. That's all. Take a look here. There's definitely, let's take a look at some articles here. So this is the big one, right? Bets on big treasuries rally are booming before Fed decision. U.S. Treasuries held on to recent gains ahead of the Fed Reserve's interest rate decision as traders ratcheted up bullish bets in hope that Jerome Powell will signal a cut in March is firmly on the table. And we have seen that 10-year Treasury yield 4.52. That is right there in the best level that we have seen in this very young new year. As we saw in December, rates kind of went into January at 4.57, 4.56. They moved up in the early part of January to 4.79, and then worked their way down, kind of crept up a little, and have now dropped. And we're seeing rates really at their best levels of this year because markets are expecting that we are going to see some more Fed cuts. Yields were a little change across the curve on Wednesday, with 2-year rates hovering around the lowest level in more than a month. So has the 10-year. As the market awaited Powell's afternoon press conference for clues in the outlook for policy, the U.S. central bank's overwhelmingly expected to keep rates steady this week. We've already talked about that, where today expectations are almost 100%, 99.5% that we won't see any kind of rate movement today. Those swaps are pricing roughly a 30% chance of a cut in March. And that's what you see when you use CME Group and you look at the FedWatch tool, you'll see that there's basically right here a 30% chance that we could see a cut in March. If that number increases, it's going to be good for mortgage rates. If it decreases, it's bad for rates. Traders have a lot riding on Powell's remarks. And this shows too, they're very, very quick to act, very jumpy on all this. Expectations for further easing climbed to start this week during a tech-driven rout in stocks, and the risk-off vibe produced a wave of wagers on Treasury gains. Blah, blah, blah. Fed has shown an accommodative bias, according to Kevin Thizow, a member of the investment committee at Carmignac, blah, blah, blah. So just this is what we're paying attention to today. This is what's going to move everything. We got to be ready for it. That's all. Kind of that's really just as simple as it is today. So Nate said the back half of this month has shown steady but slow improvement in pricing. No reason to lock this morning. Absolutely agree, Mr. Nate. We've seen it hasn't been anything amazing. I mean, you look at where we're at here on the 16th, we were at 7.07. Here we are at 7.07. Earlier in the month, we were at 7.07. So although we've seen some small moves higher up to 7.25-ish, it's still come back down to that 7 1/8 range here. So definitely keep that in mind. Good morning to Shara Turpin. So great to see you again. Mike said there's usually more movement during the press conference. Yep, absolutely. So the statement, not likely to have too much movement, not likely to have too many changes from the last statement. So that's generally why you'll see that there's not a lot of giveaway, but we're going to get a lot of questions at the press conference. They'll be asking all about, like I said, it'll be all the T's. It'll be Trump, tariffs, taxes, we may even see another, will they, bend the knee to Trump kind of question. I hope not. Might see something about if Powell's going to stay in position, blah, 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 which he already said he will. He answered that last time. Y'all are focused on broker comp, but you forget that there's a lot more out there than just brokers. So, all right, my friends, I'm going to go ahead and wrap it up. And I hope that y'all have a fantastic day. Couple of quick things. Remember, if you'd like to sign up for our free email, we send out an email with the lock advice that you can use any way you like. Share it, butcher it, feed it into ChatGPT, and use it to send to your consumers. Whatever you'd like to do at ratelockadvice.com, you can sign up for that email. If you'd like text alerts, we've got those. They'll be firing up this afternoon. We'll be sending out an alert after the initial policy statement. We'll be sending out an alert during the press conference and then our end-of-day alert. So today's a great day to sign up if you're not signed up for the text alerts, www.ratetextalerts.com, or use this cool QR code over here. And don't forget to go check out Originator Success. Find out how we can help you to get loans on Google and social media. I was supposed to tell you all about Grab and Go Social today, but I did not put it in here. I'm sorry, I forgot. So I should have that for you tomorrow. All right, my friends, take care, everybody. Look forward to seeing you tomorrow. We'll talk all about what happened today, how markets reacted, and all the good gossip. I'll catch you tomorrow. Bye-bye.